3, 2, 1. Welcome to the Forex Trading Show. Forex trading live every weekday morning. Real trades, real profits, zero analysis. Set back, relax, and get ready to profit. And now, your host, Terry from FXWithTerry.com.
Hey there, welcome. It is Tuesday morning, January 7th. Little slow start there because YouTube started playing in the background and I heard the live and me all at once. So let's get into this. Free trade still going sideways. It's been nearly a month. Yeah, you can get out of this if you want to, if you're in this at all. I mean, it's in profit. Depends on whether you are in profit or not. Who knows? Just indicative of what's going on with the market. Seemed like a lot of volume yesterday. I really haven't heard anything today. So let's look real quick. I don't think there's any major highlights to give you. I will talk about a few updates that I've done. So I'm just gonna go down the list here. And I have to look at some of these. I have some brand new accounts. Wow, I have too many brand new accounts. I did make a list yesterday. Let me pull this up. Stand by. I made a list of all the different account numbers, because I have quite a few tests going on right now. So here it is. Let's just go down. I'm going to use this list. You won't be able to see it, but I'll share it in a second here. So let's look at, I'll make a comment if I can pull this up. Here it is. Yeah, there is no trade in the stable profits feed, and people are like, is it not working? What's going on? Well, let's see if we can pull it up on the chart here. Euro GBP. If you look at it on the daily here, I don't believe much in patterns and stuff in this stuff, but you can see what it's doing here. It's literally coming to a point. It's slowing down, and what's interesting is the price that it's at right now is what you would call the median, the mean, or the middle price. If you look back 240 candles on the day chart, which is a year, we are right at the middle. And the logic behind this algorithm is that when this very low moving stable pair, Euro GBP, when it pushes out, we take the trade coming back. We are trading pullbacks from historical data, pricing based off of the mean, so the average. So as it pushes out, you can see we're just kind of in a flag pattern here. The price is going nowhere, so no, there's nothing wrong with the feed. It's just really overly stable right now, hence the reason I call it stable profits feed. Let me think here. I've got quite a few accounts I'm going to brush over. Here's an interesting one. I'm going to pull this up. You know what? I might not even, I don't even have this on this phone. Let me think if it's worth logging into right now. It's probably not. I'm just going to pull it up and tell you real quick the test that I'm doing, which is really kind of blowing my mind. Yeah, I don't have it in. Stand by. I'm going to go back to the free signal. Put that on the screen. And then I'm going to pull this account up on my other phone here. So hear me out. I'm just going to plant a little seed. We won't go too far into it. If my current way of trading is correct, which is a completely different mindset than it ever has been, is I'm thinking to myself, I'm going to be very general and basic here because we're building on something. I mentioned a little bit of this yesterday. I'm thinking to myself, if we're trading 22 currency pairs, stable profits feed would be 23, okay? Gold would be 24, okay? That means, what if I took, based off of how my algorithm works, what if I started trading one currency pair per account? And what if that account was very, very low amount, like $1,000? And what if, because auto hedge was built in, what if I trade a high lot size on that account? What's high for $1,000? Probably 0.05 or higher, 0.05 to 0.10, 50 cents to $1 per pip. Well, I'm doing that right now on a $1,000 account, and it has made, something doesn't look right on that. Stand by. Yep, I'm looking at the wrong account. Of course I am. I want to give you the exact numbers. Here it is. I'm trading a $1,000 account. It has made, bidding a 0.10 lot size, OPP feed, auto hedge turned on, $1,000 account. It has made 13.6% in 2 days. So think about that. I'm risking $1,000 on any given currency pair. I'm bidding a 10x, okay, which is probably the high end. But since I have auto hedge engaged, the likelihood of, first off, me even needing auto hedge across 22 different, 23, 24 different currency pairs, the likelihood of me needing auto hedge, from what I can see, is not that often. So the one account, let's look at it over a 12-month period. One account with $1,000 in it gets squeezed a little hard and has to go into some extreme hedging to survive. Does that even bother you? Now, if you only have a $1,000 account, it absolutely does, and I'm not suggesting that's what you do. All right, with a $1,000 account, OPP feed, the one profitable pair feed with auto hedge built in, is really good. But I'm talking about advanced stuff. I'm talking about people that have, $50,000 to trade, anywhere from $5,000 to $50,000 to trade. Right, is taking more risk on less account balance and diversifying that across the board. Hence, my membership level portfolio manager. It's a portfolio of pairs trading all on a small account balance, $1,000. Taking high risk, but you're only high risking that $1,000. So if you have a $10,000 account, now you could potentially and should potentially have 10 $1,000 accounts. Now you're going to get into this mode, and people are going to do this, and I've thought about this. They're going to say, well, if 10 $1,000 accounts is good, what if I had 5 $2,000 accounts? Why risk double when you don't need to? Because here's what I've looked at. The mathematics work out. You just have to take my word on this, from my algorithm to a individual currency pair across a $1,000 account with auto hedge built in. The survival rate for that $1,000 is massive in and of itself. I'm going to leave it at that. We will contemplate that a lot more. Trust me. Let me switch accounts. Go to the pause. Let's see here. I'm going to look at... Let's go look at gold. I want to explain a couple things that are going on with the gold account. We're in a perfect scenario to take a perfect example. So here's gold. We're in this gold trade right now. Sell trade. And I want you to look at the history of the trading that has gone on before this. And you'd be saying to yourself, we're not doing very well. Minus $5.21. Now, of course, you could scale that up if you're bidding more. But the price action is just pretty much taking out any of these hedge trades that were entered into. Now, the only way to know if it's a hedge trade, I had to make some adjustments yesterday. So that's a scalper trade. Scalper. I think I mess it up and I'm not copying. Yeah, I'm not copying over the proper comment. Some of these are hedges. You can't tell which one because you don't know which way it originally. It's probably the buy trades. Like, see where it's getting out at break even there. Getting out at break even. Getting out at break even. All that means is for these buy trades, the price pushed. It set the stop to break even because it pushed 200 points or 20 pips past into profit. And then the price backs out and takes that out at basically break even. But we're not done with this trading sequence. That's why you've got this sell trade still up there. And there could be many more trades in this basket, right? So you have to look at this entire thing. This thing is trading. It's attempting to trade at a $10 profit on the basic feed. And that translates to being a scalable profit on your account. So, if it's $10, you can scale it times 10 to $100, so on and so forth, times 5 to $50, whatever the case may be. So that's what's going on with that. Again, this time of year, right now, we had a lot of movement yesterday. We'll go look at the overall account in a second here. So let me look at this. This is... Yeah, I'm going to look at something on my end because I haven't looked at any of these this morning. I'm going to look at this. So we've got the one profitable pair feed has closed 3 profitable trades overnight. So quite a nice bit of movement there. And we're in a GBP JPY trade right now on the one profitable pair feed. So stand by. I'm going to share this one with you. Let me share this. What you're looking here is my test of trading the one profitable pair feed with auto hedge on a small account. Basically started at $10,000, and I'm bidding a 0.10 pip per thousand. Okay, it's kind of where I come up with this mathematics that I was talking about earlier. Having a portfolio of accounts, each only risking one pair and risking a 0.10 lot size per 10,000. If you want to reduce that, you can pull it back to 0.05 lot size or anything in between. I think mathematically making the jump from 0.05 base to a 0.10 base is, there really is no in between. The moment you move away from 0.05 and you go to 0.06, you might as well bid 0.10 mathematically, whether it's going to survive or not. And, meaning, is the account going to survive? And frankly, for people that have money in the market, more than $1,000, more than $5,000, $10,000 plus, I'm suggesting that you move to a model where you're trading one pair per thousand and greatly reduce your risk. Really, all I've wanted to do is reduce my risk on a balance. What's my risk? I look at my balance. My balance is at risk. But if I have if I have 10 $1,000 accounts, I'm at a lot less risk based off of how we know my algorithm works, based off of how we see auto hedging work. Speaking of that, that's kind of the update. There's no perfect way to hedge. What I'm doing right now on gold, if you're trading the gold feed, hear me out here, because it's kind of like, well, you can do this, you can either do it this way, you can do it this way. When the hedge fires on the gold trade right now, and it's the same concept, auto hedge is auto hedge. However, it is different for each. Like the standard currency pairs, I have it starting to hedge at trade 3 right now. That seems realistic. I can see starting it as early as trade 2. I'm starting it at trade 1 with gold. However, here's what I'm doing. I got rid of the stop loss. That way it doesn't take out my hedge. There is no stop loss. And here's why. Technically there is, but here's why there's no stop loss. Price action, I saw it yesterday. I was at the gym and I'm watching gold, and it went into a trade and spiked a wick so far up. I was like, what in the hell? And then at the end, that wick had that candle had a huge wick on top, huge wick on bottom. Just price action. Just all they're doing at any given price level is trying to take out stops. That's how they make money. It's a liquidity grab. They push up, take out your stop. They got your money. Now they're slowly accumulating. And you'll see they're doing that on like every candle. Let me see if I can pull gold up here. So this is the daily. Typically, I was looking at like the 15-minute chart. I mean, if I were to draw every one of these candles here has a huge wick. Every one of these. Look at all of these wicks up here. Out the top, out the bottom, and all the way up. This is on the 15-minute chart. Those wicks are intended to take out your stops. It's just crazy wicks up here. Crazy wicks all the way. Okay. So because it's being manipulated so much, and if we are in a hedge, it's going to take that stop out at a loss. However, the hedge is really not the only hedge you actually need a stop on is the last hedge you took, if that makes sense. Okay. That's a tough call. So what I've done was I took the stop off, but I kept the set stop to break even at 200 points, and we're talking about gold. So what that means is it can pull back all at once, and it's not going to take that hedge out. If it was an original buy trade and there's a sell hedge, the moment that original buy trade takes profit, it will immediately close down the hedge at wherever it's at. So stop loss is to kind of turn things off because you walked away. In our particular case, the moment an original trade takes profit, it will immediately close all of the hedges, no matter where they're at. Now, that could be a bad thing if you get into a hedge way down here and it pulls back and takes profit up here. Now you have all of that negative on the hedge. That's kind of a price you have to pay, because theoretically this hedge is equal and opposite to the order that was down here. In this case, theoretically a buy order, it's equal and opposite. So even though it's negative way up here, because you've given the hedge room to breathe, you have some hedges up here that will potentially cancel out any negative that happened that originated down here and went all the way to the top. Okay. So truly, when the price is pushing against, you really need that hedge to survive. You really need it to survive. You really do. And that's the intricate balance here of having a stop and getting it hit and being out of a hedge and then it continuing to push against you. That's the thing I'm trying to avoid. You can't avoid all of this. Nothing's absolutely perfect. But this is damn close. And this is allowing someone like me to take a $1,000 account, bid one currency pair on it at a 10x lot size, which is 0.10 lot per 1,000. One currency pair with auto hedge. It's giving me the ability to have some confidence that I'm diversified enough to where when one pair runs away on one $1,000 account, I can choose to help it out a little bit with some manual hedging if I need to. Auto hedge is in place, but price action can and will take it out and protect that particular $1,000 for the, and I'll just give it to you straight, for the 2 or 3 times that happens all year long on that one currency pair. And we have not seen it happen on all currency pairs at once. We haven't. We've seen 3 or 4 here and there. But again, if you have auto hedge built in, you're probably doing pretty damn well. Let's pause this. Let me see. Oh, you know what I didn't do? Yeah, let me show you this. So obviously I'm in this is a test account, started at 10K. It's only been running how long? 2 weeks? 2.5 weeks? Let's look back. I believe this is a test account, so this has been running a while, but I'll show you the stats. So it's closed in NZD CAD overnight. And you'll notice, because there's just not a lot of volume in the market, that even though bidding a 1.00 lot size, my system only decided there was enough movement to take $6.97 worth of profit. But after the fees, because we're bidding heavy, it's only a 32-cent net profit. So no big deal there. We're ahead of the game, right? We need some volume in the market. But if we go scroll out to the week, $2,460 just for the week. Yeah, we're taking a lot of risk. You're going to take some risk on these hedges that didn't work out, right? But it's still giving us a really nice net profit. It's high risk, and we're going to make, the more you risk, the more you make. But it's high risk. If you look for the month, it's made $5,786 for the month. And I don't believe that's quite a full month. It's about 3 weeks, if that. It's impressive. Okay. Now, take this impressiveness and scale it down to a portfolio of $1,000 accounts. The only way to actually do that is it would probably be pretty hard to do it. If you had access to the full fee right now, still be probably pretty hard to set all those copiers up. I'm looking at some solutions where it would be more of an initial setup, let's say $1,000 setup, to have yourself set up a system where you could copy 25 accounts, 50 accounts, right? No real limitation. You're probably not going to trade any more than 20 to 50 accounts, right? You probably wouldn't need to. It also means if you're trading 100K right now, that you could probably make as much money with less risk. If you're trading 100K right now, you could probably do it with 25K with what I'm telling you, having a portfolio. So there's some softwares and stuff that I'm looking into, I'm experimenting with. Finally actually just got it working today, which allows you to potentially not have $400+ a month in copy service fees. In fact, you could get your copy service fees down to probably anywhere from $20 to $60 a month, right? So yeah, it's a cost of doing business for all this stuff. It is what it is. It's not, you're not copying for free. Um, so nonetheless, this is a pretty impressive account, and where I'm getting the whole concept of a diversified portfolio. All right, let me look at my account list. 10 pip hybrid. Let me look at this real quick. I haven't looked at any of these feeds. Okay, the 10 pip hybrid has not taken it's not taken a trade. Interesting. Stand by. I'm going to look at something and make sure that I don't have it. Talking about the 10 pip hybrid feed, I just want to make sure that I haven't stopped it from doing what I want it to do. Max number of copies, symbols. Yep, it looks fine. I'll have to check that out a little bit deeper. I had wanted to get out of that 10 pip hybrid, what you would call a group. So let's get on to something else here. Free signal, already looked at that. Let's look at the premium signals feed. This is basically a glance at the entire algorithm and what it allows us to do. What it allows us to do is get a feel for what's the overall drawdown of the market, how much volume's going on. So right now, very low, $118 drawdown. We're in 3, 4, 5, 6, 7, 8, 9, 10, 11 trades. So really indicative of what was going on yesterday. We just don't have the volume, not a lot happening. I usually can tell that by the amount of trade notifications I get while I'm sleeping, because my brain just kind of hears them. Just kind of hears the pace. And I don't know if I heard maybe any last night. So here's what we got. $191.93 worth of closure on the overall algorithm. 2,082 for the week. Now, I know it's only Tuesday. When I say week, it's looking back. It's looking back a total of 5 trading days. So that's impressive. And for the month, 8,370. So we had a lot of volume yesterday. It just has come to kind of a point, kind of a flag, like I was showing you on Euro GBP. I think we're waiting for the inauguration. I think they're waiting to see how this all plays out, how it goes. I think they were waiting to see what happened yesterday on January 6th, which is, certifying the election day. Everything went smoothly. So I think the market's just kind of sitting back. I would expect probably, not pure speculation, that when Trump is sworn in, that within 24 hours, Bitcoin has a spike in a positive way. People just want to make sure, this country's going to survive, and that and that the president that they elected is actually going to get inaugurated or sworn in. So stand by. Let me pull up my account list, see if there's anything else. Let's see. Got that going. Got that. 3K. Yeah, that's pretty much it. Yes, I have about a dozen and a half accounts that I monitor, that I trade, that I take care of. So we'll come back to this. I think I said what I wanted to say on the hedging stuff. It's a constant evolution. I constantly think about the best way to implement these hedge trades. I want it to be 99% automated. I feel like right now it's about 95% automated, at least on my end, right? Well, only on my end. Let me see if there was any questions. I see you guys making some comments here. Derek says, I believe in 13 days it will go bonkers. There you go. Because of the inauguration. Mark says, and I knew Mark would already be on this. In fact, Mark, you and I need to have a conversation when you get a second about this. I'll run some of my deeper thoughts by you. But Mark says, I've been trading 11 accounts for about a year. I have the pairs separated by the non-cross pairs. I love this concept. Yeah. There's definitely some. It's kind of like checks all the boxes of not being so emotional that when, like for example, here's what I did when I'm thinking about this portfolio concept that I'm telling you. I went back and I looked at AUDJPY on July 10th, 11th, and beyond. The floor dropped out on July 11th last year. I wonder if, while I'm setting here, if we can pull. I'm going to see if I can pull this up. What do I say? AUDJPY. Let's actually add that. We're going to see if we can find it. It's really not that hard. So go to the chart. I'm going to go to the day. For some reason, I'm doing it on the wrong mobile device. Hello, welcome to having two phones. Here we go. All right. Just going to show you something here. So I'm going to go back to July. So 3rd of July, 19th of July. So it happened somewhere. I'm going to put a line on the chart. Put a vertical line on the chart at, let's see, 7-9. So hard, 7-11. Right here. So I'm going to zoom in now on the 15-minute. And yeah, that's not going to work, is it? That is not going to work. I don't think I would be able to. I don't think I'd be able to scroll back that far. Let's see how far back we get here. Bear with me. I really want you to see this. So there's October, September. It's my thumb exercise. August. All right, so we're coming up on it. And that's as far as it's going to go. And it went all the way back to the beginning. I want to do this. Stand by. I'm going to pull up a chart. I'm going to go to the pause screen. I'm going to pull up a chart in the browser. We'll just go to Trading View. So give me a second. So tradingview.com. I will share my screen momentarily. I really want you to see this. Let's see, super charts, loading a little slow this morning. So what I'm going to do is I'm going to go to AUDJPY. And let's see, we'll pull it up on IC Markets, 8 cap. Let's pull it up on this one. Now, let's see here. AUDJPY, it's showing June, July. This is on the 1-day chart. Stand by, I'll share this with you in a second. It's been a little while since I worked with It's been a little while since I worked with. Just not going to happen for me today, is it? I really don't even see the time frame now. Of course, when you're using, I'll share this with you in a second, but when you're using Trading View, It's just not even letting me change the time frame. I wonder why. Time frame. Absolutely no option at all to change the time frame. Yep, not going to happen. All right, here's what I'm going to do. I promised this the other day. I'm not going to waste your time right now. Let me come back to the screen here. Man, I am all jacked up this morning. I'm going to go get a screenshot of this. A lot easier to do while I'm not live on camera and shit ain't working. I'm going to give you a screenshot of that AUDJPY. Here's my point. I went back and looked at that, which I thought was very indicative of the worst day of the year last year. It dropped through the floor, and then it continued to drop stair-step fashion for weeks and weeks after that. It never came back. It has had a pullback here in December. It is still not back to that level it dropped away from. So it's trying to get there. If you traded that, some people are like, well, I trade the pullbacks, right? You get a huge pullback, they enter a buy, and they're like, it's going to fill that price. Yeah, it might fill that price 6 months later. You don't know. Anyway, I'll give you a screenshot. But by running my algorithm at a 0.01 lot size at $1,000, it survived. $1,000 account survived that move. It wasn't pretty. So a 0.05 lot size with auto hedge would have survived, theoretically, AUDJPY. What's weird about AUDJPY is if you look back in last January, a year ago, AUDJPY at a 0.01 lot size per thousand did a 0.5%. It did a 0.5%. And then February, it does like 1% in terms of, profit. In January, February, in March, it does like 1.5%. In April, I think it got to 2%. It was like AUDJPY wasn't making shit all year. And then literally through the floor. So here was my thinking. I'm like, if I bid scared on AUDJPY, because let's say I know the future. Let's say it's last January, a year ago, and I know that AUDJPY on July 11th is going to drop through the floor. So I'm going to bid for that, right? If I knew that was going to happen, how would I bid? I would probably bid pretty high. I'd probably bid a 10x or a dollar per pip per thousand in my account. And theoretically, I would only have $1,000 accounts. And I'd make great profit all the way up until July 11th. It drops through the floor, right? Now, here's the other thing also, is that I would, if I was trading a $1,000 account, and most people will trade the OPP, the one profitable pair feed with auto hedge. It's similar to trading one currency pair. However, trading, you don't get to trade all of them at once, right? I mean, theoretically, you could trade each individual currency pair all by themselves, and that's what I'm saying. But you would have made nice profit doing a 10x bid or a dollar per pip on a $1,000 account throughout the year, and then that 1 month, 1 week, when it tanks, if you lost it, you've been pulling out your profits every month. So you frankly wouldn't care about losing one $1,000 account, because at the end of the year, if you look at what that thing made, if you lose the 1,000, put another 1,000 in there, and it trades the rest of the year, you made a hell of a lot more than, or certainly equal to, the $1,000 of loss. But don't forget, you have 21 other currency pairs also doing the exact same thing, right? So the amount of diversity you have and the protection you have, I don't know. I believe it's the future of trading, and that's why I'm creating the portfolio manager level, because it has to be a different way of thinking and truly a different setup. You're probably not going to have 20 plus, 30 accounts at Social Trader Tools. It might not be cost effective to do that. So that's why I've looked at other solutions. Certainly having, you can buy a software tool for $1,000 lifetime, and as a copier, you can have that forever. Okay. So that's something that I'm testing right now. Is it complex? Yes. Do you have to have a VPS? Yes. Does a good VPS cost about $60 a month? It does. Right. But if you got, a portfolio that you're managing, that's nothing. There's nothing to that. Let's see here. Mark said something I'm trying to understand. It says you need to contact broker support past 6 accounts. Okay, interesting. That's perfectly fine. So, or you can diversify across a couple different brokers, so on and so forth. That might even be a smart thing to do, but not 100% required. So anyway, that's it. That's what I'm going to get into today. I've had enough. I will see you Wednesday, January 8th. And yeah, that's it. I'll see you in the group. fxwithterry.com. Come into the group, get some of these free trades, and get access to this incredible automated algorithm and scale it to whatever you want to do. That's it. I'll see you guys in the next episode.
Thank you for joining us on the Forex Trading Daily Live Show. Get access to all of the free trades with full auto trading at fxwithterry.com. Be sure to subscribe and get notified of the daily live stream. And get ready for your next profitable Forex trade.